Going over the results today in the 50K and 100K portfolio. 50K was up about 450 per contract, so a small gain today after a week of losses mainly. So I don't know how I put that there. $450 per contract on the 50K, 200K. Small gain today of about plus 1,500, and there's one position still open. And so small gains today after a week of lots of chop and a losing streak. So a little bit of a bounce back today. Let's go over the market internals and trades on the day. We had the advanced decline line higher, and the market went higher on the NASDAQ. Also, another interesting observation is the Fibonacci retracement that we saw yesterday. This market had another one that's right around 61.8%, and so one of the things you can look at when volatility starts to shrink is potentially look for Fibonacci retracements if you're a discretionary trader. I like to discuss these ideas because they can be useful for developing new strategies. So they just discuss new things and make new observations, and that's how I develop strategies. I think about things and to make observations. We saw that 61.8% yesterday in this trade right here, and we also saw another thing we saw in the NASDAQ is the yesterday 1,500 was resistance. Today it broke through that resistance, and when it came back to 15,000, it supported it. So nice, neat support and resistance there. You don't typically see it work out that well. Usually it will take that out, at least knock that stop out, and not nicely and neatly support 14,999 and then 15,001. Pretty nice for a, you don't typically see it work out that well. And the Fibonacci's don't typically work out that well. From an observation point of view, let's look at the trades on the day. Soybeans Day Trader 3 has had about, let's see how many trades in a row. We've had 2, 3 out of the last 4 trades were winners. 10 out of the last 10 trades, 60% were winners, up 11, 62.50 on the month after a tough July. July was very tough. Only 20% of the trades were winners. Only 20% of the trades were winners in June, but we had some big winners, so that was still a winner. And then so July was tough, but we came back. Soybeans Day Trader 3 bouncing back, 3 winners in a row. Highlight of the day, highlight of the week, really in that market. As you see, the entire week did pretty well. This is a break-even stop, so. And so 4 out of 4 days this traded, and 3 out of 4 were winners. One was a break-even stop. So Euro, we're going backwards here, plus 150. RBOB, no trades. Natural gas, no trades. Crude oil, we had 1 trade over here in the portfolios. Cobra Crude minus 725. And then this right here, we are not trading this in most of the portfolios, and it just did really well. So I've looked at putting one of these in the portfolios at least. We don't want to increase our daily risk too much in some of these portfolios, but the SR Counter Trend 2 V2M is turning out to be a strong market, strong strategy, plus 575 in the 1-minute, 5-minute, and 15-minute version today. And once again, we don't trade this in most portfolios, so considering adding the 1-minute version. Copper, no trades on the day. Silver, no trades on the day. Gold, we had no trades on the day in gold either. Strange market to have metals not generate many trading signals lately, and energies either, not many trading signals and energies in our portfolio strategies. Exhaust and reverse having a big day. This is the type of day, you know, volatility spike, then it shrinks back, and you get this pullback market, plus 23.25, and more wavy type market environment. Let's look here at NQ2. We're going backwards today. We normally go in the opposite direction, and we had Cobra 3. Big stop loss plus 415 on the day, and yeah, so the 50K portfolio it only traded Cobra 3, and the big stop loss version and regular stop loss version were the same. So about up 415 on the Cobra 3 strategy, and up 415 per contract in the 50K portfolio. And gap continuation 2020 big stop loss minus 725. Getting stopped out on that rollover trade there. Looked like the market might reverse up there. I thought it was going to reverse, but it came back. Viper 2008 plus 435, plus 25.45 on VSD long only, plus 1935 on VSD long short. PR breakout minus 325, 60-minute breakout minus 1175, plus 950 on 60-minute breakout A. This is the A version and B version. And in Q, first workspace Cobra 3, non-profit target version plus 415, profit target version plus 415. Not a lot of extension. Thought the market might roll over on us. Tick pulse V12 in Q plus 255. ES2, VSD long only plus 1750. At tick fader minus 625. ES, we had adaptive moving average, nice winner today, strong trend higher all day, plus 1100 on the day. Cobra 3 plus 1250, plus 1250 on the profit target, non-profit target version, no extension. Tick pulse V12 minus 8750, 60-minute breakout, plus 1587.50 on the ES. This is one of the highlights today and yesterday. This one still has a position open. And after hours 3.0, minus 725, our after hours strategy, overnight strategies that take that long bias. The long bias is down overnight. So taking a look at that. Gap fill master plus 175. And did I go over this one? Minus 87.50. So those are the trades on the day. Start if you're a discretionary trader, you want to explore something new. Looking at Fibonacci retracements now in this environment could be a trend that is working in the indexes going forward in this type of market environment. I haven't seen Fibonacci retracements work much in recent years, but it's might start working now, so something to watch for. Also, the portfolios were near worst case drawdowns, had a little bit of a bounce back today, looking for a bounce in those. Always researching adjustments, so stay tuned if there's any adjustments. I don't like to make too many changes. We've been here before, we've been in these drawdowns before, and we've been through choppy periods like this before, and so just staying with it. And if you're looking to add to positions or start, this is an ideal time. You want to buffer technical errors and worst case drawdowns by starting in a drawdown, and you don't usually get the opportunity to start when it's down like this. Even after today it was up. So let me take a look. So coming in today, the 200K portfolio was here, so up about 1,500 on the day. That puts it back at 12,800. So about $4,000 from a worst case drawdown. Nice opportunity to bounce as we're coming into the end of the month. We have 7 trading days left. We've talked about the pattern where the market chops at the beginning of the month, has lots of trends in the middle, and then chops at the end, and so you can maybe have your gains in the middle, and then sometimes you see months where it trends really well at the beginning of the month, chops in the middle, and then trends again. And so we don't necessarily have to have trendy markets. We can trade markets that are somewhat choppy, but if they're just massively choppy, if a large percentage of days are just massively choppy, and here's what we're seeing is if you take a normal distribution curve, what's normal in the markets might be to have some choppy days, normal choppy days 60 to 70% of the time, and then trend days even 20 to 30% of the time. And now we're seeing the normal distribution curve for that skewed. You get choppy days, seems like 90 to 95% of the time, and trend days 5 to 10% of the time. And so when it's choppy, it's been really choppy for a long time, and when it's trendy, it's been really trendy for a long time. And so normally we get not days that are not as choppy and not as many, and normally we get days that are more trendy but not as trendy. Lately we've had just huge trend days, so you get these losing streaks and then these big bounce backs instead of some losing streaks up. You're getting more of a losing streak and then a big bounce back because of the nature of this market has shifted right now. And so that's just some observations that I've made, and we've seen a lot of chop, and we've seen today was a little bit of a trendy day, so I anticipate we'll see some more trends going into the end of the month, and look at bringing these drawdown numbers back, and then so that's So you can see the opportunity to get in at a drawdown. And if you look at that drawdown curve, has it been here before? Let's draw a straight line through the drawdown curve. And you can see, at the $13,000 level, it's hard to draw a straight line, but you see that's been there, and then, the density of these chops increases with volatility. So you see more density in the choppiness, less density in choppiness during this time period, less density here, and then more density because we're working at higher index levels, and you're going to get more chop, and eventually you're going to get a worst case drawdown. So you want to you want to start out down here, and then you're there for for any worst case drawdowns, you can withstand that, and then as the market comes back, we can make adjustments, and so we work on making seamless adjustments as well. So that's the update for the weekend for Friday going in. This is through Thursday. For the 200K portfolio, I have not updated the portfolio calculator for Friday's trade, and we'll have that over the weekend. Here is the 50K results, and it's right there. Waiting for it to update here. All right, so right at a 50% of worst case drawdown, not on a 50% of capital drawdown, but 5,000 out of about 10,000. And that was yesterday, made about $400 back today, down $2,300 yesterday. Add that 400 down, 1,900 on the month. And here is the, it comes here all the time. It comes to this drawdown level all the time. So pretty normal. And that's the what I wanted to share with you as we go into the weekend on August the 20th, 2021.